Like Boss here, folks. Today we're going to be talking Power Solutions International. This company's stock is up 330% this year. So we're going to be looking at what's been driving that rally and why it's done so well, while one of its peers, Westport, has been crashing here over this last year. As you can see, they're down around 35%. So the company's recent rally at Power Solutions International seems to stem from its focus on alternative fuel engines, liquefied natural gas and combustible natural gas in particular. PSIX is similar to Westport, but it is going after a different market with their engines. Remember, Westport is mainly focused on their partnership with Cummins in hopes that high mileage heavy duty engines, those ones that they are used in the tractor trailers, semi-haulers, will switch over to natural gas in a big way in the future. They're really betting on that infrastructure being built out and switching over to that technology. PSI's recent success has been highlighted by strong sales of its alternative fuel engines for power generation systems, which use wellhead gas at natural gas wells to power them. The company has also been growing revenue at 10% per year since 2008, but has seen growth surpass that rate over the last 3 years. If you look at company presentations at their investor relations website, you'll see they point out that they've experienced a 35% annual growth rate, but they're using their 2009 year for their base, which is a really weak year following the onset of the Great Recession. I think it's a better idea to look at their growth from 2008, since you did see a huge pullback from 2008 and 2009. Also, when we look at Wall Street's expectations for the company, four analysts are predicting a 5-year growth rate of 32% a year, so they're expecting growth to really ramp up going forward at PSI. The growth markets at PSI are alternative energy engines for heavy duty and forklift markets. They see a lot of growth here, and it looks like they're also going to be trying to get into the Chinese markets. Investors will really want to pay attention to make sure the company executes well on those two segments, the heavy duty one and the forklift one, and also keep an eye out for their entry into the Asian markets. The takeaway here, though, folks, are shares have really rallied because of the potential for new natural gas engines to drive sales at the company at rates near 32%. Investors looking at PSI today are paying a hefty premium, though, in my personal opinion. Westport, though, is still twice as expensive as PSI on a price to sales basis, and that premium could be the culprit behind Westport's underperformance in relation to PSI. The street has big expectations for growth for Westport and PSI, though, and in order for investors to come out on top with these two investing strategies, those companies will need to surpass those expectations the street has set for them. So in that case, I'll be sitting this natural gas engine revolution out, but those interested should take a second look at PSI, since it appears to have a nice niche market that it's trying to get into. Remember, that heavy duty and forklift market, and is a lot cheaper than Westport at today's current levels. That's all I have today on PSI, folks. If you'd like some more great stock picks, we have 3 stock picks. You can email us at retirerich@fool.com. We'll send you 3 stock picks that help you save for retirement for free. That's all I have for you today, folks. Thanks for watching, and Fool on.